Gopi, I'm audible?
Yes, sir.
Okay, thanks. Good morning, all. We'll start the session in next 5 minutes. People are just joining. Thank you. Good morning, all. Thanks for joining. Before getting into the presentation, maybe this disclaimer about this entire work is to for the education purpose, and there is no inherent implicit of either a buy or a sell recommendation. Uh, the today's story we are going to talk about is Indigo. I think it's a brand which we are very familiar. I think most of us have used it across our life, but I think it's a fantastic story from even from investment point. So this is our second series. First Emperor Decoded we did with the Titan. Now we are doing with Indigo. So before getting into the Indigo story, it's very important for us to understand certain key terms in airline business. And there are four important terms which we should be very familiar. So to understand how a company is operating on the operational parameters, the first is something called ASK, available seat kilometers. Basically, you multiply the total number of seats available and total number of kilometers those seats were flown. It tells you the capacity of the airline, right? Typically, like how in a manufacturing plant, we end up seeing the capacity. In the airline industry, ask will reflect you the capacity of the airline. And something called RPK, revenue passenger kilometer, is basically again, you multiply the number of paying passengers and the distance they fly, right? So these are the two key parameters you will come across when you see any airline company. Uh, the next Another two parameters, one is load factor, which is we are very familiar. Basically, load factor is computed by dividing the RPK by ask. So it gives you an idea for the 100 capacity, how much capacity has been fulfilled. And that gives you an idea because this is a highly and operating leverage business. Only at a particular higher level, the company breaks even. And this is the one number which people generally look up. And finally, something called block hours, again, a new term for most of us, basically refers to the time from when an aircraft door closes at the departure until it opens at the arrival gate. So basically taxiing time, flight time, and the ground time, right? So basically, higher the block hours, better for the organization because the asset is productive. The lower the block hours, it's bad. So I think given all the four parameters, we had a basic understanding. Now let's get into the uncommon wealth creation journey of Indigo. Because whenever we speak about airline, the first thing comes into our mind is, oh, it's a asset heavy business, a very cyclical, very difficult business, obviously, from operating point. And obviously, legendary investors always commented, you come with 100 crores and take 10 crores from there, right? In terms of you lose a lot of money in airline. I think at a broad level, it holds good. But at a micro level, there are certain organizations globally and domestically have done exceedingly well. That's where I thought it's good to comment this journey as an uncommon wealth creation journey. And we will see what led to this wealth creation, what are the risks this business carries, and maybe some operating numbers, right? So that's the whole idea about this entire session of Emperor Decoding. So before getting into India and Indigo, I think to give a broad context on how global airline market is structured, right? So if you look at on the left, on the 100% market share of the passenger, this one, right? So Asia Pacific is 31% market share in terms of obviously, right? We have China and India, very large populated economy. So definitely, right? This number is only going to go up. Europe has 27% world share in airlines, and North America has 24. The smaller one, Middle East, close to 9.5, Latin America 5.5, and Africa 2.1. I think here the big growth will come over a very long period is this, but I think currently it's not a big number. And very interesting, this is data as on 2023 end year, taken from Southwest Airlines from the reference point. Africa, Latin America, Middle East had recovered, and obviously the larger economies are yet to recover. And if you see, the highest load factor is close to 84.4 types, right, in terms of which is Europe and even North America. Having seen this, now let's get into India market, right? What is India market is all about? So we have 15 airlines. That's a number which I would like our viewers, our learners to know. I mean, in terms of this is an industry where it's regulated. So you have number of airlines is 15. We have close to 15,000 passengers in terms of travel count. This is domestic, all domestic. The number of city pairs is 808. Very interesting. And if you look at last year, which is March ending 2024, the plant load, passenger load factor is 87.6, significantly higher. That reflects the lot of growth got revived. And that's where the stock price of Indigo also got reflected brilliantly in the last couple of years. Um, this is at the India domestic passenger level. And if you look at the passenger traffic, right, in terms of for the last 10 years, very interesting data in terms of, so first I'll read about the aggregate passengers, which is 10 crore passengers moved to 20 crores. Obviously, we had a significant dip during the COVID, and then just now we have broke even again, gone back, right? So as on 2024, the numbers are at all-time high. Very interestingly, on the domestic passenger travel, right, which used to be 6 crores, hit 14 crores. We went down and now close to that 15 crore mark. And if you look at international, which is 4 crores, went down as much as low, less than a crore, right? So significant drop. Obviously, we know the reason because of COVID, and again, it has come back. But broadly, interestingly, including COVID, the entire passenger growth is close to 10%, far significant. And if you remove this couple of years, it is close to 17 to 18% growth types, right? Clearly reflecting the underlying trend of we traveling via airways, right? It's such a mega trend. I think one big miss, if at all somebody missed, right, in terms of from an Indigo point is, I think they were actually behind a big tailwind of the higher people traveling in airlines, right? I think this data signifies that this is including COVID. And if you remove COVID, the number is far, far significantly higher. And if you look at operating metric, right, again, this is 1 year back data, but clearly brings out why some companies are done extremely well vis-a-vis other company, right? So as I told, the passenger load factor is PLF, something called break-even load factor, basically at what level of load the company breaks even. So for Indigo, if you look at break-even is 75.5, and this is FY23, 82.1%, right? Clearly, they have better load factor, which led to profitability. Just to put this in perspective, if you look at SpiceJet, another competitor, obviously lost market share, currently only close to 2%. Their break-even load factor is more than 100%, right? So passenger load factor never can cross 100 because that's your capacity. So basically it tells you they have to reduce a lot of operating cost, at least to even break even at some level, right? This is where efficient players continue to gain market share vis-a-vis a player who does have a cost structure. See, few airlines like Akasa are very new. Their cost structures will be elevated, but as they scale, this number has to come down close to this 75, 70, 80 horizon, right? Otherwise, they're not going to make any money out there. Now look at the fleet size, right? See, because Indigo is the actually close to a monopoly type, and let's understand the fleet size of the economy. So we had 427 aircraft in 2016. We hit 684, a very good rise. But if you look at, interestingly, the COVID 3 years, right? 2020, 21, 22, hardly any growth. But if you look at Indigo capacity, right? This is where the entire value creation happened in terms of from a supply side. Indigo got their capacity right. So from 217, which itself was a big jump from 159, moved to 262, 285, 275, right? In terms of if you look at 159 to 285, this is a journey where they created capacity in a time when the demand actually collapsed. Obviously, it could be even a serendipity or a well thought out strategy, capacity and a structured manner. But this capacity addition led to capturing the growth when the growth came back. So what India is expected is currently we are close to that 800 odd, and then we're going to close to 1400 in terms of by end of this decade. Obviously, a lot more heavy lifting, but Tata Group, which has multiple business like Air India, a couple of other names, will also going to expand their capacity. So this is one industry where it's very, very difficult, first of all, to get the capacity up. And that is where I think Indigo scored big time, at least in this period particularly. Now, what this resulted in a very sharp revival post-COVID and a good capacity, right? So a player who is ready to capture the demand, right, perfectly resulted in a gain in market share. So if you look at Indigo, right, even though it's a free market, you hardly see any industry where a one player commanding close to 60% market share. Then you have other players like Vistara 10, Air India 10, Axe Connect 7, SpiceJet 5.4. You have this number. I'll share you what is the September number is even more dismal. And obviously, right, Akasa, which is a new airline with 4.5%, and others, right? So basically, it is becoming like a two-way market with Indigo at one end and Tata Group in other end. But if you look at September numbers, right, which came day before yesterday, even more interesting, from a 60% market share, Indigo has currently moved to 63% market share, right? This is, I would say, a super dominant position. And if you look at a player like SpiceJet, which had 5% market share and the beginning and the March of 5.3, currently 2% because a lot of vehicles are stranded now because of both technical issue. And I think they are in for a lot more fundraise, get the operational activity up. You will see competition level going up. But at this point in time, Indigo has become like a super dominant, technically controlling 2/3 of our market, right? So if you have to see 63 in the context of what global context, right? So if you look at across the world, no other country has a market structure like in India with this kind of a growth and population, right? Our growth is phenomenal and it's for next 5, 10, 20 years, we're going to have a growth and you have a market leadership like an Indigo. To put in perspective, if you look at Indonesia, Lion Air has 60% market share. In USA, interestingly, American Airlines, Southwest, United, Delta, all carry a very reasonably equal market share with all four put together close to 60. China has served by 9 major players with an aircraft bench of 400 to 600. So I think in every market, there are more players. Maybe Indonesia is too small, but still Indonesia has a Lion Air as a commanding. But in India, which is a very large market and growing market, Indigo has gone to 63, right? I would say this will be probably the highest market share by any company in any country in this one. So in nutshell, Indigo is all about operating leverage business, which we are going to learn a lot, business of execution and play on India growth story. So that's what Indigo's Emperor Decoded. Now let's look at briefly the journey of Indigo, right? It's only a 14-year, 18-year firm. 2006 commenced the operation. Then you had 6 aircraft to 15 aircraft by 2007. Interestingly, by 2011, it surpassed Air India to become third largest airline. So I think quickly they scaled up their position. And by 2011 also, they have launched their international services. By 2012, they have become the largest, right? So very fastly they caught up into the ranking. Obviously, they have been a little fortunate in terms of the market structure. You had Jet, Kingfisher had their own problems. So I think they losing the market share and Indigo with the capital and the capacity gained the market share. By 2017, they operated 1,000 flights a day. And by 2023, they've carried close to 10 crore plus passengers, right? So that's a big significant operational scale up in 18-year time. That's what Indigo has achieved. And if you look at broadly what Indigo assets are, right? The first biggest assets is aircraft. 367 aircraft as we speak on March 2024. This number has slightly gone up, but I think the broad number is 367, up 63, right? So this is very important given what is happening with Airbus and Boeing. So Indigo predominant aircraft is from Airbus, which I'll share it in the next slide. The number of destination is another big asset they carry, which is 88 destination they carry, plus 10. International is 33. And obviously, right, both the operating metric is been growing, right? So this is what the network of what Indigo is. And if you look at the fleet breakup, currently 367. And if you look at 31 owned finance fleet, 323 operating and 13, and predominantly Airbus, right, or almost right. So it clearly gives you, they chosen one particular type of an aircraft and they've expanded that gives them operational flexibility, easy maintenance, less amount of spare parts needed across the hub, right, to give uniform service across vehicles. Now, let's see the operational highlight, what Indigo has achieved in the last 1 year, gives you how operating variables have been growing. So if you look at ASK, which is the capacity has grown 21, the passenger, where this one is 27. So clearly, right, this has gone up. So that led to a passenger load factor moved from 82 to 85. Whenever passenger load factor goes up, right, since it's a high operating leverage business, it results in a big profitability, which we will see in subsequent slide. So there was a significant improvement in passenger load factor. If you look at number of passengers also have grown. So almost all parameters, if you look at, right, has grown between 18 to 20%, reflecting the underlying business is growing at a very healthy rate. I think that is something which we have to keep in mind, right? To put in perspective, India real GDP is close to 6 to 7, nominal GDP 11. And you have a company like an Indigo, which is a very large company growing at operating metric close to 20%, or roughly, I would say, 2 times of India's GDP, right? I think that gives you an idea. Larger company growing 2 times of India's GDP and sustainably, right? That is where the big value got released. And if you look at operationally, right, on-time performance, generally Indigo tend to be the best, and I'll share some statistics data from DGCA. And by end of 2024, very interestingly, Indigo became the 7th largest by daily flights, 5th largest by passengers, and 5th best by operating time performance, right? So clearly, in lot of scale, Indigo is becoming the global top 5, top 10. And if you look at market cap, right, which is one of our last slide, it's become one of the top 3 market cap stock in airline business globally. The biggest factor of reliability of service is the in terms of one is on-time arrival and the cancellation, right? So again, I just highlighted 2 brands, nothing specific on SpiceJet, but I think SpiceJet is very close to us. We have seen SpiceJet, the way it rose, and obviously, right? And if you look at SpiceJet, this is as on last month data, September data, 4.12% is cancellation. At an India level, if you see, cancellation rate is close to 0.85, right? So as a passenger, you should be very well aware the base rate of cancellation is 0.85. So out of 100 flights, 1 flight getting cancelled is close to a norm. And if you look at SpiceJet, is close to 4 flights, and Indigo is like what, for 140 flights, maybe a 1 flight gets cancelled, right? The lesser the number is better. This gives you confidence that the vehicle will take off. Maybe there could be a time lag, but it will take off, right? I think that's where a lot of trust has been built over a long period of time. If you look at revenue, right, it's not a small company. Indigo reported close to 70,000 odd crores of revenue, up 26%, right? Keep this number because when we get into cost structure, I'll share how cost is played out given the sharp rise in revenue. But interestingly, if you look at the revenue, right, ticket cancellation is a very, very interesting value proposition, obviously, right? As a consumer, we don't like it, but what they get paid out is close to 400,000 to 5,000 crores of money they are able to make it. The sources from a couple of books and the annual report. Approximately 15 to 20% of the tickets get cancelled. That's a very interesting stats for us, at least to have an idea. Extra baggage is another big revenue driver for almost all the airlines, obviously, particularly to Indigo. Cargo is another driver of business, which is close to 1,800 crores of cargo. In-flight service is close to 1,000 crores of in-flight service. There is a very interesting 4th revenue item, which generally we don't end up thinking is other operating revenue, which has some incentive, some subsidy. But interestingly, there is something called others, which is 1,058 crores, which is basically Indigo gets the compensation from OEM when there is an unavailability of engines for certain aircraft, right? So clearly, there are a lot more revenue drivers. Obviously, these are not very big, but when they come, right, they add a lot more into profitability because typically they don't have any cost structure generally, or they'll be very, very less in cost structure, right? So that's where I think there are 4 revenue items. Apart from what you travel, then you have cargo, in-flight, and other operating. But if you look at overall growth is 26, primarily driven by the more passenger growth, right, which we have seen already in the early slide. But so what led to this in terms of good growth is branding is one such activity, obviously, right? There's a very interesting quotes from the book which got recently published on Indigo called Sky High. Only thing should be cheap, should be tickets. Every other experience can be made a little better. So that's a basic thinking of Indigo at the root level, obviously, right? We don't know how far they get practiced, but at least from a philosophy point, the thinking is tickets should be the cheap, but not the service. This is another interesting data on Indigo is Indigo spends very roughly 0.2% of revenue for advertisement vis-a-vis a typical airline spends 2 to 3%. And obviously, right, they've done something interesting of brand language, like instead of saying fly to Goa, they used to say that Indigo to Goa, right? Reflecting the brand becomes a synonymous to fly. And that's where I think current market share is also reflecting. That resulted in a very significant passenger growth, right? So I've shared India passenger growth is close to 9 to 10%. And for Indigo, if you look at, right, including COVID dip, it's close to 15%, right? So consistently they have gained the market share, or I would say they've always grown 1.5 times better than the market growth. Market growth itself is solid. Indigo growth is super solid, right? So basically from a 33 million passenger, it structurally grew. Obviously, these are COVID years. You had a dip, and again, you broke even by 2023, you have crossed it, and now you have crossed it, right? And if you look at India-wide, we just broke even 2020 numbers now, right? But if you look at Indigo, Indigo is already up significantly or before COVID numbers to now, right? Reflecting the gain in market share is even more sharper during post-COVID era because of that capacity addition. Now gets into the cost, right? So we saw revenue grew by 25, 26%. But if you look at the cost structure for an airline business, the first important cost structure is the aircraft fuel expense, which is a very large expense. So for Indigo, close to 24,000 crores of money they have spent on fuel, right? A very large. But interestingly, last year, the fuel expense did not grow or grew by 1%, right? So you had revenue growth of 23, the largest expense flat. Now you understand what a typical high operating, high cyclically variable P&L, right? I think no better example than Indigo's 24 number, where revenue grew, the biggest cost line item did not grow, obviously, right? That resulted in a significant profit growth. So otherwise, rest all expenses grew sharply, which is basically airport fees, supplementary rental and aircraft repair is one such major item, grew in line with the capacity, and obviously employee cost grew sharper. This is a global phenomena where the employee expense is getting risen primarily due to inflation, shortage of people, depreciation and finance cost grew close to the capacity or close to the revenue, right? So basically, but if you look at the total expense, only grew 12%. This is primarily driven by the lower aircraft fuel. So when in an airline business, it's a perfect thing if someone gets high on demand and no expenditure growth by fuel, right? Your profit pool will expand significantly, and that's what happened in Indigo and few other airlines. So this is how a typical cost structure of aviation, this is across the company, not only Indigo, but that's come from DGCA. Aircraft fuel and oil is 45% the large expenditure. Then comes the depreciation, user, crew expense, operating tickets, and so on and so forth, right? So I think the more you get this and a few other, right, you get it right. Interestingly, apart from this expenditure, almost all expenditure are fixed in nature. This is where this minimum capacity load is needed, right? If they don't travel, right, you're going to have cost structure fixed and no revenue. That leads to a very, very difficult business to operate, right? And that is where in the last 20 years, we saw many players were not able to succeed and eventually exited this market. Again, this is another similar data on Southwest Airlines did a good work of sharing how aviation fuel can be a big swing factor. So this is historical data in terms of for the Southwest. Typically, it's 40%, but during COVID times or before COVID, right, it used to be 22 to 30%, right? Reflecting whenever this number goes down, the profit pool of an airline can significantly rise. And whenever this number goes up, you are very, very rest assured the profit pool will go down. Now, what are the other few cost initiatives which Indigo has taken? And again, a pretty unique perspective is they went about having no bottles, no oven to reduce the weight of the plane, right? See, a plane weight, higher it is, it's going to consume a lot more fuel, right? So very, very clear, any airplane carrier, right? Very, very clear in terms of reducing the weight is their one big goal so that it gets the fuel efficiency up. And one statistics, interestingly, again from the book, is close to 400 crores of savings have happened due to no oven within the flight. And there is another interesting data on the water usage. So they did a study and they figured out water usage during winter is less than in summer, right? And what they have went about it during the winter, the amount of water carried is reduced dramatically from 200 liters to 100 liters, right? So I think as a carrier, right, they're using multiple ways to find what is an optimum use of the weight to reduce the fuel consumption, which will directly reflect into the profitability. So what are the strategic approach which typically Indigo operated is? One is low cost model. We all know they continues to maintain this low cost model. Fleet uniformity, predominantly it's Airbus one. On-time performance, I think Indigo has been one of the most consistent, reliable carrier in India. A rapid turnaround times, they are known for it. Obviously, at times it creates hassles to us, but I think for the price, they have to operate very efficiently. And finally, right, aggressive expansion, right? Say they continuously added new routes, increased the frequency of the existing routes. So this is a strategic approach which Indigo has done over the last few years. And if you look at the growth outlook for an Indigo type of a business, they are aiming to double the scale by end of decade, which is 2030, with an order book of aircraft of 980, targeting 600 aircraft, right? So they are close to 367 aircraft currently as we speak, and they want to go to 600. It clearly puts them into a very good by capacity. Anybody looking for the growth, capacity is the first constraint. And if they don't get the capacity up, growth will not come. The company plans to expand to international. Interestingly, off late, the market share of domestic carrier international is expanded by 5% in the recent past because few airlines are focusing more into international. Indigo is also launching finally the business class product. Obviously, this is a much awaited one. Let's see how it plays out. And finally, if you look at a per capita consumption of aircraft, right, in the airline, right, it's 0.13 vis-a-vis 3 times, right? So clearly reflecting a huge runway for growth for the entire aviation and particularly a leader like an Indigo. So what is creating this opportunity to fulfill? One is growth in airport and aircraft. So number of aircraft, if you see, US has 6,000 aircraft, China roughly 4,500 aircraft, and we have close to 650 to 700 aircraft as we speak. This is an even more interesting in terms of airport. I think airport, US has close to 5,000 public airport. Obviously, they have included all other non-public airport also close to 15,000 in number. China has 531 public, and India has 149 public operational airport, right? Reflecting we have a long journey in terms of the creation of airport. The good news is a lot more airports are going to come in next 5 to 6 years, and two big new airports are coming in next 1 year probably, which is one in Mumbai, Navi Mumbai, one in Delhi. Indigo also placed the highest order recently, right? Created huge havoc in the market in terms of capacity creation, which is for the Airbus A320 family. The second opportunity is the GDP growth play, right? So this is again a very interesting data from Southwest. What they've called out is typically airline revenue will be 0.82% of India GDP. So if you look at Indian economy, which is close to 300 odd lakh crores, this reflects close to 2.4 lakh crores or 2.6 lakh crores of a revenue for airline. I think if Indigo has done 68 with 60% market share, or approximately like we are doing a 1 lakh crore of revenue, right? So clearly reflecting in the long journey, as we have GDP growth of 11%, and today we are extremely low, right? We will have GDP growth, and this number is getting caught up, right? So this is something very interesting. So over a long period, I think expecting 1.3 times to 1.4 times of India GDP growth, which is nominal growth, is what I think airline business can do. What this all resulted in a all-time high operating numbers with high cyclicality. I've obviously underlined the high cyclicality. So let me run through the sales number of Indigo. Right on FY 2014, right? Indigo did close to 11,000 crores of sales, and it grew close to 40, and then it fell sharply. Very rarely you see business revenue going down sharply. This tells you inherently what the risk an investor carries in this type of a business. But the good news is, since its underlying profit growth is growing, the demand trend is good. The revival happened sharply, and currently, if you see, they reported close to 70,000 crores, right? Very steady trend if you avoid these 2 years. Now, if you look at expenditure, right, again, a very similar graph, you went down, you went up. The even more very important slide one, which is the operating profit. Typically, used to be a very low number, picked up 847. Obviously, you've been oscillating close to 5,000. You went down very close. But if you see the last 2 years, right, I would say it's a golden period, which I don't think Indigo would have ever imagined. Moved sharply, closing above close to 18 to 19,000 crores of operating profit, right? I think this is what happened when you had capacity, demand revived, and you are in a very prime position to capture it, and then you did not have the fuel price rise, right? Big. That resulted in something called a dramatic rise of PAT. From 317, hardly any money, you went into deep loss. I think 19, 20, 21, 22, 23, I think 5 years of a significant pain, reflecting underlyingly, it's a very, very difficult business. No better data than this can tell you. But eventually, I think in a good year, the number picked sharply. I think the cumulative money, they never would have done 8,000 crores. I think they did in 1 year, right? Reflecting how variable this business is, but still a very interesting business to learn from. Margins are close to all-time high. Used to be EBITDA margins close to 15%, went as low as 5, now close to 25%. In the short run, the market is an voting machine, but in the long run, it's a weighing machine, right? So let's see how this entire business with such a difficult operating nature, but did extremely well, how the market performance have happened for Indigo. So if you look at rolling return, right, in terms of interestingly, very interesting data in terms of a 1 year rolling return analysis we have done on Indigo. And if you see, there are multiple periods of time. The 1 year rolling return is more than 50%, right? So clearly, it's not that Indigo never gave an opportunity. It's a very, very highly cyclical stock. But I think there are multiple periods within their entire phase of listing, right? It gave you a good opportunity to make between 30 to 50%. And there are times where sometimes they made more than close to 100%, right? So there were incidents between 17 to 18, then you saw a low of 18, then you hit a very sharp rise. So there were multiple occasions where the rolling return analysis clearly reflects Indigo as a stock able to deliver 50 to 100% type of money, right? So maybe a good trade stock rather than maybe only buy and hold. But I think it has delivered, but with lots and lots of volatility, right? But if you look at point to point, obviously it's not the right comparison, but just to see from the day one of the listing of Indigo, how Indigo has performed vis-a-vis, maybe the first thing is the largest, right, global LCC carrier, which is Southwest. Very interestingly, Southwest has been doing extremely bad of late for their own reasons also, particularly. And obviously, LCCs are not doing great globally. So last 8 years, nothing has happened, or actually they've lost money. Vis-a-vis Indigo has performed close to 400% type of a performance. Primarily the last 1 year, it's been a significant rally of performance. But I think the even more interesting data for me as a student, what we can learn is, right, there is a strong narration currently, small caps are the only way to make money. But I think if you look at great company, right, which is doing good in their operating business, gaining market share, and doing very well on profitability, right? They can do really well even though the size, right? And aviation type of a business, most of the companies should be large enough because I think this requires a lot of capital, this requires a lot of people, bigger infrastructure-led companies, right? These are. And if you look at Indigo, right, it has done 400 odd percent vis-a-vis Nifty at close to 200 and CNX small cap close to 240 from the day Indigo got listed, reflecting, I think, one, a well-run large cap with volatility can still deliver a phenomenal value. I think this example of Indigo makes us to believe, I think, if you find a good sector, good company gaining market share, size is just a number, right? A larger companies globally like an Apple, Google, Amazon is growing phenomenally well, right? And Nvidia also, right? So I think size is not only a constraint to choose a stock. We have to see operatingly, they should be very strong, market share dominance and growth rate, anything between 1.5 times to India, 2 times of India's GDP. I think definitely it should be in our radar. So what all this resulted in a phenomenal rise in market cap. And today, if you see the perspective, right, Delta market cap is close to $32 billion. Um, Indigo market cap is close to $21 billion and rest, right? I think clearly in the last 18-month rise of value made Indigo to be one of the top three large global airline company, right? That's coming out of India, right? So that is something a good recognition to have. Um, Having spoken about really how well they have executed, how well the strategy was and all, now let's see the major risk in this business. I think inherently it's a very, very tricky business, very difficult business. The first is the competition. Now you have again a new competitor like Akasa, and obviously Air India with new leadership is gaining market share. So I think something which will become even more interesting as the capacity for the competition comes up in next 2 to 3 years. Any execution delay can be a big problem, which can lead to loss of trust. I think every aircraft, after it takes off on time, has to get out down on time safely, right? So it's a very, very difficult business, tricky business. But I think as so far they've done good job. Sharp rise in fuel can really damage the profitability, a known factor. Production delay. I think this is something which almost every airline guys are keeping the mind how Boeing is going to bring up the capacity up because otherwise Airbus is already running very tight and we don't have many other large airlines, aircraft manufacturer globally where we can source. I think primarily we are both banking on Airbus and the Boeing. And finally, failed routes, right? So typically, one of the expansion strategies, you end up getting into a new route, and maybe if you don't get adequate load factor, right, that can lead to a lot of loss. In summary, I think Indigo story can be summed up in 5 points. The first one is clear market leadership with a double-digit volume-led growth for many years to come, right, with good capacity. The second one, it's a business of execution. Indigo has displayed with a low cost across the market cycle. Third, it's a play on growing discretionary consumption. Last 10 years sales growth of Indigo is close to 20%, right? I think very few stories can give you where growth rate is as high as 20 with very limited supply, right? So there are a lot of consumption areas where growth is high, but supply is significantly higher. I think in airline business, growth is high, supply is constrained, right? I think that's the where from an investing point makes a lot more sense. Uh, Good business to this is a good study to understand how operating leverage and financial leverage plays because a lot of cost item ex fuel is fixed in nature and you don't get the minimum capacity up, lot of loss going to happen. And finally, right, from a student point, how we think about Indigo is it's a good growth industry or airline is a good growth industry, but high amount of cyclicality, right? I think in a nutshell, I think our whole idea about doing this study is one, very large cap did extremely well operatingly, financially, and market cap, and also gives us a very good example of how companies can thrive in a very, very difficult environment. I think these are the two big takeaway from an Indigo. I think hope you do had good learning out of this. With that reference, broadly, we have used a lot of annual reports of Indigo Southwest to refer back both India level and the global. Book, as I told, Sky High's one book recently got published on Indigo story. And finally, the DGCA, where you get regular updates and the statistical data on the entire aviation business. I think with this, thanks for your time, and we'll be happy to answer any broad question on aviation and nothing particularly on the price levels, all that stuff. Thank you. Thanks for your time. The floor is open for the question. You can type it in the chat box. I will reply in next 5 minutes. So if you have any question, please type it in the chat. So far, I think there is only one question. So let me answer that. Looking back and today, all the factors prove Indigo to be an emperor. What are the indicators that are visible early years as they grow that the airline heading towards a path? I think you always saw them doing a consistent in terms of the timing, right? I think I'm sure we have experienced other airlines, and generally, right, if those who have traveled to Mumbai, delays are inevitable. But within that, also you end up seeing Indigo flights are at a reasonable time. They were always conscious about on-time delivery. Obviously, they do slip at some point in time. So I think this reliability factor, adding the capacity at the right point in time, and obviously they were very, very lucky in terms of the market structure was very, very weak at that point in time, which resulted him they gaining substantial market share over a period of time. I think coming back to your second question, sir, how did they manage to keep the market leadership? I think instead of the obviously promoter issues all. So the big learning, right? Very interestingly, a lot of market participants, including us, right? We never owned Indigo, is sometimes we get colored by getting into the issue of promoter. Obviously, it was a known thing. We have seen it, but the underlying demand of aviation was real, and the market structure was weak. And this company was rightly positioned in the right place. I think few factors I would say was by design, a few maybe by luck. But I think we have to give the merit to Indigo to execute what they have done. And I think they have delivered phenomenally well to the shareholders in an industry which generally don't generate any value to shareholders. So that's a learning from as a student. Can you share the PDF or presentation? I think the video will be put out, sir. I think you will be able to watch it at your leisure. Since the expense are mostly on fuel, do they hedge it? I think for them it's an operating expense, so I don't think hedging makes sense because every day they have to buy fuel, right? So it's something where you hedge and then suddenly price drops. You have something where you sold the tickets, but the price drop and you can't make more money, right? I think ideally, I have not seen specifically they are hedging it, but I think from a basic thinking point, it's something which is a daily operating expenditure, and I don't think it makes sense, lot of sense to hedge the expenditure. How do you project international operation growth since it's not offering a premium experience? So I think we are yet to see. I think these are very, I think international is there, but I think they're going to put a serious effort currently. I have not experienced Indigo for when I travel to international, but I think they are very, very serious now. The initial few years is more of an attempt to see can they do. But if you look at India passenger, right, close to 75% is domestic and close to 30%, right? 70% domestic, 30% is international. Indigo predominantly doesn't have big market share in international. I think the next leg of growth they see is international and obviously business class. How increase in geopolitical tension, increase in crude price will affect the cost of Indigo? I think for every aviation business, these risks are real. I think it will be holding good for Indigo. Interestingly, this I think all of us will travel a lot more in airlines, right? I think this is the big trend which Indigo will ride. It's not about will they get affected? Definitely, right? This is a business risk. Someone who is looking from investing angle have to consider. Operatingly, it's a very, very difficult business. Considering the high debt level, is there any guidance for management to reduce? I think currently, I don't think they are very, very high on debt. And typically, if you look at their current structure, right, most of the aircraft are leased. So I think the problem with any airlines is the cost structure, right? You buy the aircraft on the lease, so you basically have a fixed expenditure in the P&L in the form of depreciation or the payout for the aircraft, and you don't get the productivity, which is the load factor. You end up losing money, right? I think that's a primary problem. If anything happens to Indigo, right, think about a 63% carrier will become a national asset, right? Because if they are not there, it becomes very difficult for us even to fly. So I don't think they have a bigger worry on debt, but which I don't think management has ever guided on anything on these things. They are in a far better wicket than many other players. Just to put in, we don't have any exposure to Indigo in any of our portfolio personally. This entire exercise to learn from a very difficult industry how well a listed player has done, not only in India, globally. I think that is the entire context on which this Emperor Decoded is being started, and that's what our endeavor to do over a period of time. Thanks, sir, for your delivered in conclave. Thank you. How to get fixed cost expense Indigo or others? I think all the P&L except fuel, right? All the cost structure is fixed. So I think, and fuel expense for all of them should be very similar, right? Because of how much you fly, you use it. So if you look at the break-even factor, right, which I've shared already, if you take fuel as 40, the balance is all fixed cost, and that is where operators who are able to reduce the fixed cost, primarily their employee expenditure, their entire other cost structure lower, they'll be able to make a lot more profit when the scale up. I think it's like, thanks, Vishnu. Okay, thanks all. I think thanks for joining. We'll connect back next time in Emperor Decoder in the next new company. Thank you.
Sir, one question from YouTube session.
Yes. Is a question. Okay. Who is next to Indigo? Fantastic, right? It's like, I think this question keep coming up, right? When we think about a HDFC Bank, what is next HDFC Bank? I think next HDFC Bank is next HDFC Bank, right? HDFC Bank will become that. I think Indigo is today 63% market share. Don't think it's going to be very easy, but hopefully, right, Tata Group is going to put a lot of trust, and we will have a very balanced aviation industry or airline industry. That is what needed from a customer point. I think few more serious players will get it, but I think it's going to be a long journey before we see another company getting the scale of what Indigo has ever attained. Indigo is depreciating nearly 6,500 odd crores. What is about? I think it's for the capacity of the vehicle. They have 367 aircraft, right? Basically, that entire lease expense is reflected primarily in the depreciation, right? So that's a larger expenditure apart from the fuel, which and apart from employee expenditure will be your aircraft depreciation. Aircraft from India that go to international trips can get the fuel for a discount from Middle East. I think it's a question which I think I have to get into further details, but I think if you have a choice and permittable, I think they will do it. But it's a question of how much capacity you can carry, right? Because obviously, right, you carry more than the fuel what you need because of the price, but it's going to reduce your fuel efficiency of the vehicle to carry it. So I think the operators will use all their existing legal means to reduce the cost structure. And I think that is what an efficient player to see in a business where the typical end price is like a commodity, but the cost structures can be very, very elevated. China and India trying to change energy, resources, oil to power that impacts profitability. We are yet to see. I think these are very, very early days, but I think over a long period, obviously, right, like every other industry, aviation also will transit, and hopefully the profit should stabilize if at all we get a better energy resource. But I think for next 5, 10, 20 years, I don't think something is coming up, at least as far as my knowledge is concerned. Lack of airport infrastructure in India, how it's influenced industry? Absolutely, I think this is a big pain point, airport infrastructure. You go to Chennai, you go to Bombay, you go to any airport, you feel like it's like a bus station. But the good news is governments have recognized we are getting a lot more airports. As I told, large place like Bombay, which is getting Navi Mumbai is getting their airport, Delhi is getting one more airport. Close to, I think, 220 airports will be there by 2030. I think all this will give them a good leeway from slots and from a growth point of view. Okay, thank you. Have a good day.